Awesome. All right. Well, appreciate you all for joining this month's small account challenge. Not when I say challenge, it has evolved over time. I'll just do a little bit backstory why it's pretty much I started this as a small account challenge with myself. Been trading since the early stages of COVID. I did very, very well all the way up until about 2022, where I got COVID and I started chasing, traded sick from my bed, and lost quite a bit of what I had accumulated. So I had to refresh my mind. It's always good, also, just to kind of refresh. You see that the market's always changing. Um, there's different indicators that's always being looked at. We have a bunch of different strategies that we use. So this was kind of a challenge against myself to get back to the basics, stop chasing, stop trying to hit the home run. Kind of, I'm a huge sports fan, so we all know that home runs are flashy, they win games, but it's the singles and the doubles that adds up and it eventually wins championships. If you all watch the World Series, you saw that with the Phillies. They were hot, and then once their bats dried up, they ended up losing three straight. So without here we so I'll talk a little bit about different TAs that I have used, and then obviously the main ones that I am using. And I like to do a lot of charting. I'm a very visual learner, so that's how I teach as well. If you have any questions, feel free to ask. I prefer you put it in the chat so people that aren't on here will be able to see it, and then we can learn together. Um, these are Brandon's notes. So he talked about the 5 minute and the different time frames and his charting. So again, we will do different strategies based on how we trade. We trade very differently. These gray marks are his pre-market. He trades pretty much with pre-market data on 24/7. I just look at pre-market data and then I'll turn it off. My charts aren't as clean, they're clear as his. So today we'll talk a little bit about technical analysis. There's a billion different kinds. Obviously, Fibonacci is the most prominent is retracement. There's Fibonacci oval, Fibonacci. I'll have to show you when I'm on the because I don't really use them. You have the SMAs and EMAs. So when people are charting and they're talking about moving averages, make sure you ask, is it the simple or is it the exponential? So I strictly use EMA. It covers more. We can go more in depth at a later time if you want. I do have a class. If you are a VIP member, if you go to, I will try and look for it. Please remind me. But it's also in our the VIP recordings on the Level Up library. So I talk about SMAs and EMAs in a specific class. There's VWAP that people use for day trading, RSI, you have volume, MACD, demand and supply zone, Bollinger Bands, etc., etc. So today I will talk about the 921 EMA and Fibonacci's. First, I shared this in the chart as well. If you don't and cannot read charts, it's going to be very difficult for you to be able to trade. I like to trade with trends. So that's why have been bearish, because the market has been bearish. Now that the trend is looking to move into bullish, I'm looking for different bull trends. So this top row, you have the double bottom, which is one of the most widely recognized symbols to be bullish. You have an inverted head and shoulders, the bullish channel, and then you have a bull flag, which I have been showing quite a bit of those lately. Then you have the opposite, the double top. You have a head and shoulders. You have the bearish channel. So it's looking like it's a bullish scenario, but then it breaks the bottom trend line, and then it tries to break back into it, retest that bottom trend line before making a lower low. And you have the bear flag, which you have this pull, the bearish pull, and then you start doing that bearish channel. And once it breaks out of that channel, it goes back down. Bullish rectangle, bullish pennant. So pretty much bull pennant, bear pennant are very similar to a bull flag, bear flag, etc. So again, this is just being able to see these without someone telling you is just hours and hours of practice and studying and reading charts. Uh-oh, did not mean to do that. So let's get on with Fibonacci's. So I think a couple of you have been here before. However, so Fibonacci's have been around since the 17th century. Some have dated it even before that. Is basically another pi. So a lot of people don't understand, but the golden ratio that you get from dividing the number ratios with its previous one is the golden ratio, and it's a infinite long, just like pi, 3.14, 1.618 into infinity. It doesn't repeat itself. So basically what you do is you take zero, you start at zero, you add one, and then you just take those numbers. So you take 1 plus 0. So that's the second one. It's a little bit difficult to see. Then you take 1 plus 1, you get 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8, so on and so forth. And then if you, again, I hope you all like math. We're going into a little bit of math class right now. If you take half of those and you're able to create a perfect arc within these squares, so you can see this 3 square is exactly 3 by 3. This is a 5 by 5 square, et cetera, et cetera. If you're able to take an arc from corner to corner perfectly, you get what you call as a golden spiral. Well, what is this golden spiral? This is used and seen throughout the world, throughout the universe from time. So you can see it with hurricanes and natural disasters. Our galaxy is made up of the golden spiral, the snail shell, pine cones, different leaves, etc., etc. And if you look on a tree, a perfect tree branch will also have this 1 plus 1, 2, 3, 5, 8, 13, etc. So for me, I am very, very big on the universe, nature. If nature has this, to me, it's important, right? And so someone was able to include this into our trading. And so now we'll get into that real quick. What are the golden ratios? So like I said, I like to do a lot of charting. So I'm going to bring up Thinkorswim here. And we'll just look at what the golden ratios are. So whenever I chart, I always, always, always start out on the weekly. If I'm looking at a chart for the first time, I'm going to start out. Those are not supposed to be there. So I'm going to give you an answer, I guess. Always start out on the weekly and zoom in. To me, it's just like looking at Google Maps. You are out if you're trying to find someone's city, or even if you're that type of person whose hobby is to just look at different areas on Google Maps, do geo tracking, what have you. You start out from an outside view, from the space view, and then so that's the weekly, and then we go into the daily. That might be the country or the continent, and then we go into the 4 hour or 8 hour. That might be the 8 hour might be the continent, sorry, the country, and then the 4 hour might be the state or the region in that country. Then you have the 2 hour, 1 hour, and then the 1 minute is basically the street. So I always start, some people do from bottom to top, but if I ever ask you to make a chart, I will ask you to do from the top down to the bottom. And you can do it. So here we are on the 3 year. So I'm going to do the 3 year high. Well, not technically. So the 3 year highs is 52. You can see these wicks up here. However, I'm going to go to the nearest high because truthfully, yes, I do care about what the past has that is able to make a larger picture. However, this nearest high is what I am going to be looking at first. So I'm going to go from the nearest high to the lowest low, and then you can see here, just as you just saw me plot this right now, and you can see I have different colors. So it's a little blurry. Let me see if I can come over here. So our Fibonacci levels are 100. I can just look at the properties. So these are the ones that I use. You have 0, 0.236, 0.382. 0.5 is not a Fibonacci level. However, that is what we call the 50% retracement. Can anyone guess why the 50% retracement is extremely important and a top level?
It's where the most price action tend to
Right.
be.
Yes, exactly. So if you think about a bell curve or any sort of mathematical study, you look at the median or the mean, right? Look at the average. What is going to be most likely? And that's going to be at the 50%. That's where the most price action, as Angel said, is. So when we talk about supply zone, demand zones, you'll see this when I zoom out, this supply and demand zone is going to be around this 50% to the 61.8%, which you see here is our golden ratio. So then you have the 0.618, 0.786, 1. And then again, if you're good at math, you took calculus, you'll understand that this 1.618 is almost identical to this 0.618. What's up with Millie? I saw that. Or is he sorry, the one that replied? My bad. And then the etc. You add 2.618, and you'll see why I go all the way up to 1.618 here in a second. Oh, okay, I got you. Sorry about that, Millie. Didn't mean to call the wrong name out there. Um, so if you look at this 50%, again, you can see this is again where most of that price action, and we see a lot of our rejections are happening, right? So here we had a pretty big rejection. Yes, it broke below it, but it never quite made that next fib level and shot up. And then we're coming down, and then you can see here we rejected it multiple times before finally being able to break it and going up to a higher level. So, like I said, this 50% retracement and the 61.8% are two of the strongest levels. So that's why those are different colors. If we can zoom in on the daily, you can see here exactly how that works. Now, again, when I said I looked the chart, I go out from the weekly. So what am I going to do before I even draw the Fibonacci's? What I'll do is I'm going to be looking at different trends. So what are some things that y'all can see here? This is a pretty Delta has a lot of movements, but there's still a few trends that you can see. You'll
Who you asked again? What did you
What are
ask?
some chart patterns? What are different trends or chart patterns that you see on this weekly chart?
Oh, chart pattern.
Yeah.
Inverse. Thought I see it. Nah, is that an inverse? I see double tops
Yeah. So you can even pretty much qualify them as quadruple tops,
or
right?
triple. Yeah, yeah, yeah,
There's that. And then what do we see here? We see massive wicks. So when you see these wicks
yeah.
right here, you're seeing, okay, there's zero price action. It's like, all right, this could be a block buy. We have this week is strong. This next week, this could have been maybe a Monday, right? Shoots up, it's earnings, it's an earnings. So once this earnings doesn't come, it's like, all right, well, here we are. This white dotted line is the 200 EMA. So y'all will see that on my charts, 200 EMA rejects it. And then now we have that. Can see a little, this right here is what is this? It's an inverse head and shoulders.
Yeah, that's the one I was talking about. Inverse.
Oh, okay, inverse, yeah. So it's an inverse head and shoulders. Again, we can even put price action here. So right now I'm gonna just put, okay, I'm gonna put price action there. We have price action here. So you see on this inverse where a lot of this is, that's exactly what happened last week. we held. So now I'm saying, okay, we're able to break it. So another thing that we can see is on that chart that I just showed, we can draw from this bottom, we can draw some trend lines. And then we can draw a couple trend lines here. So if we draw a trend line here, we can extend this to the right. I'm going to remove that and make this there. And then we can draw a trend line here as well. So you can see once we broke through this in this trend line right here, so we have, it doesn't have to be a perfect, so you can see this was a lower low. However, we made a higher high right here. So even if we wanted, and so this is what I do and I used to do during COVID. I used to just take charts right there, boom, we have a trend line coming here. We broke it to the downside and then we're able to sell off farther in that sense. So yeah, so here's quadruple top. We have a double bottom here that we just saw. And again, when you're talking about such, these are hundreds of millions of volume. It's not going to be perfect. These are not perfect double, triple tops, quadruple tops. However, it is showing that there's very little price action here. And you can see with this. So when you see little price action, once it was able to hold, that's how we're able to get this super strong candle right up here. Is it said, okay, well, we broke through it. So now algorithms and everything else pile on. But at the same time, it's a lot easier for it to fall down and not hold. Is that making sense so far? Are there any questions? So now let's go to one of my favorite stocks that I chart, which is a little bit easier to look at. And why do you think this weekly is easier than the Delta weekly chart? Like, why is this clear per se? Uh, Not quite. That helps. That definitely helps to show where you're going to have some major resistance and or support. But look at the volume. Each week there's about a half a billion worth of trades, selling, buying going on. With Delta, it was around 190 million, 90 million to 100 million. So yes, 100 million seems like a lot, but if you imagine how much capital, and it's also a cheaper stock. So if you imagine how much capital it takes to move that stock, that's why you have so many, you have very little wicks, as you kind of saw there on Delta. So that's why it's also important to understand the type of stock you're trading. So yes, we have wicks here, but it's more fluid and there's a lot more. So right here, you can see that there's pretty much a head and shoulders that broke down to here. There's we can do a pretty easy trend line right here. Once that broke, now we're on above that trend line. You can do a trend line this way. Once that broke, it shot up. Let's take a look at Apple. Yeah, exactly. Like Apple's a very fluid. I mean, what's Lucid, right? I mean, look at Lucid. This is a very ugly stock chart because there's such little volume. It's so easy to manipulate. But you look at Apple, Tesla, like
Yeah,
it's
I'm sorry. I was gonna say that lucid thing is ugly. I was trying to chart that the other day, and
yeah.
I was looking at that sharp thing, and I was calling it a swordfish. Like I was just making up names for it.
Right. So you have to look at I mean, yeah, look at it. This has almost the same amount. This had 750 million. The volume was 750 million. So the same as AMD, but it's a $10 stock. So that's another thing to be able to look at is if you see is volume spike, you're able to get in. So the same thing, I've been on Carvana for a minute, right? If we go back, I got in short. I was super, super short for a while. I did get out most of it. I still am short because their earnings, I guess I should have got back in. Um, I know a lot about the car industry, so I just knew that. And then this right here is a massive bear flag. Broke through. Unfortunately, I did not get in at this 35 level. That would have been a very nice. However, when I called it out, was right here on this spike. Wait, no, where was it? One of these had a huge spike. I called it out around the 35 level. So there was a massive, massive volume spike, right? Yes. So it was right around here. So I called it here, right around the top. Um, but look at this volume. Once a tiny, and this is also when you hear of short squeezes, et cetera, et cetera. When you hear a stock, like look, so this daily volume before was around 7 million. And then this one got all the way up to 22, 23 million. So when you see that, that's just something to jump on and you get that premium spike. Boom, you get 3, 4, 500% gains within 5, 10 minutes because simple supply and demand. Someone's gonna pay a premium for you to get it, for them to get in on this, because especially of the GameStop and AMC and all of that. Someone's like, I think this is gonna go to 100, so I'm gonna buy this at maybe $52, but I'll pay a $56 price for it because I expect it to go up. And that's all because of this volume spike. So I got in here, this shot up the next day, and I was like, well, shoot, my stuff's down 80%, but I know about the industry. I was like, this is just a story. And then I was able to get back in and average down a couple of days later. So um so yeah, so that's another thing why it's important to know what these stocks are. So if we go back to AMD, what kind of chart patterns? I want to talk about chart patterns before we really, really dive into Fibonacci's. What chart patterns do y'all see here on let's go back to the weekly. Back on the weekly. I'll make it a little easier. I'll zoom in right here. What's this? What are we making here?
Cup and a handle.
There's multiple cup and handles, yeah. But we also are making, so that's a high. What are we making? Higher highs and lower lows, right? And then finally, once it starts to take, some news comes out, it takes off. Now, if we come here, what are we making? We're making lower lows and lower highs. And then once it gets some news, earnings comes out, it just shoots down. And then I think we're in I'm not sure who just said cup and handle, but I believe we're in a massive cup and handle. Look at this. Unfortunately, you can't draw U's, but look where we are. You all see that? So when you think of a cup and handle, you need to go around 30% of the cup. Right here's one cup. And what is also a cup? What can you also say is that?
Double top.
Exactly. So not only are we bullish, we can trade this to the downside as well. Okay. So maybe I'm extremely long on it. I I don't have any stocks or shares. I don't have that much money to have shares all the way out to 2026, 2027. AMD, I think, is going to be a $250 stock eventually. I mean, depending on if they reverse split and all of that fun stuff. But you expect when on a cup and handle for it to come 33%, 50% is 33 to 50%. Well, just by looking at this, hopefully I'll shock you all. Can you see how much percent of that cup that is? What does that look like to y'all? So this is the top of the cup and that's the bottom of the cup. This right here is right around that 50%, right? And that's where we get our 50% retracement. Boom. Now and then that's what we're looking at. Unfortunately, it didn't get in a couple weeks ago. That would have been nice if we got in even last week or the week before. But here we are. So now we can look in. Maybe we'll have a little bit of a pullback. This will come back here, and then we can go up there. So we also have what's called an Elliott wave, which Brandon will teach at a later date, but that's something else that we can look at.
Yeah, that's what I was going to say, an Elliott
Nope.
wave.
Yeah, exactly. So this right here is
So
an Elliott
sorry,
wave. A higher high and a higher low is an Elliott wave. That's just what it is.
so I was
Sorry.
gonna ask I mean, when you come around from the cup and handle, that's the start of the Elliott wave.
No.
Oh,
It doesn't have to be an Elliott wave to be a cup and handle. This just is.
oh, okay.
I mean, it could be a very, very smooth cup and handle as well. There's just an Elliott wave that's inside this cup and handle on this right side. And so if you all were around, I called AMD at set right here. I called it I said it's $100 stock. I got it at $85, made about 1,000% gains at 100 and sold. If I held to 130, that would have been around 23. This from this move to this move, if you got $100 calls for 2 weeks out, it was around a 15,000% move. So I stopped looking at AMD for a minute. Yes, I made 1,000%, which was great, but that's I wasn't really well versed on Elliott waves then, and so that kind of annoyed me that I didn't pay more attention to what Brandon was teaching. But what do we also have? What can this be considered? What is this called? This is that one of the chart patterns that I called out earlier.
I put it in the chat, but it's a flag.
Oh yeah, the bull flag. Sorry, the the chat's on a different screen, so I'm not over there looking as much. So yeah, so it's a bull flag, and then it broke that top, and now we're shooting up. So truthfully, tomorrow, just like Brandon taught, right? We're looking to chart our weekly, or what did he say about how he charts? What does he plot first? You look at the weekly high and the weekly low. So I don't feel comfortable entering this cup and handle until we break above this little area, last week's high, because very well could have been a pullback, right? So same for this. This would have been a perfect entry. Man, I don't know what I'm doing. So we have this. There we go. So we have this little area right here. So this would have been the perfect entry. You trade this up to the last week's high. And then now you know that this right here, this area is going to be, I can come this way. This right here, the top of this is going to be a little bit of support, or sorry, resistance, but we blew through it. And then you go back to the next week. You have this area, the next resistance is the top, and we just keep blowing through it, blowing through it. However, where did we just find resistance? We just found resistance all the way back here at this area. Well, that's a thing also. You have to understand that this is the weekly time frame. We haven't even came into the hourly or the 30-minute or the 15-minute. So this cup and handle, I mean, this has been trading out since February of 2022. It made the double top and it completed the cup June of 23. And then now here we are in October. So if this is a true cup and handle and this is truly AMD, what's going to happen? This is going to shoot up to back to the 160s, 170s. Because this is a massive move. And what catalyst is coming that could shoot AMD up? They just had their earnings, which they almost doubled. What other one? Their competitors. Their competitors' earning is a week. You think they're truly competitors? There's enough semiconductors to go around the world for just two companies. So you just have to be watching Catalyst. And again, this would have been very AMD earnings were at the end of last week. So let's take a look at it. And so that's a thing also. And that's why we need to get a more microscopic view. So this right here looks like a very, very strong weekly candle, right? Well, let's go into the 5-day, 15 minutes. Or let's go 10 days, 20 days. Let's go 20 days. Or 1 second. So if you look at that weekly candle, it wasn't that strong, truthfully. It was strong on Thursday and Friday. So imagine you were trying to trade that. However, we have this golden ratio here. Look at that. The Fibonacci, it didn't quite hit that 50% retracement. However, it came close, but it made so it broke. Technically, this is a bear flag, what we're seeing right here, because that's the bear pull. So this is the bear pull, and then we have the flag. But what happened? It broke it to the top side. If this rejected this here and came down, then this would have bounced right back down to 92. We broke that out to the top side. Unfortunately, I wasn't around. I wasn't looking at it. I don't know what my excuses should have been, knowing AMD earnings, knowing exactly what happened last time, seeing that they almost doubled earnings. This should have been a no-brainer to do calls. However, you all know how calls are during earnings seasons. This move right here. So if you got into call options, you didn't make money until it broke over, I think, on this candle. So imagine you get into call options. This moves up $2-3 and you're still low. So again, it's just patience. It's the long man's game. However, if you got into calls right here at open, you would have made a decent chunk of change for sure. And then now what are we doing? We're just making higher highs and higher lows coming up, right? This right here is going sideways, but then it finally broke through. It held, what did it hold? It held a Fibonacci level. And then now here we are. So again, I'm not comfortable jumping into this until we break 119. Or if we hold 116, you can definitely scalp it from 116 to 119. However, that's pretty risky. Kind of to try and answer your question, you have to wait for the break of the handle. So most handles, let's see if we can find another. See if Tesla has one. Not really seeing.
AMD has one on daily.
MD has one on the daily. Here recently or okay. So this right here, I don't know if this is what you're considering. So I would say this technically even broke it because it broke the. If it goes below 50% of the cup, then that's really not even. I wouldn't say that's a true cup and handle. Which one are you? Where are you looking at? I guess
I don't remember, but I remember seeing one on daily.
so. You can kind of say this is one. So that's the thing is they're all kind of really.
Microsoft has one.
Like
That's what I saw when like I got after I got into the swing trade.
okay.
So
Oh
if you
yeah.
go to the monthly, like go to the monthly, you'll see it like real clear, and then go to the weekly, like you'll start zooming in on it.
Yeah. Okay.
Yeah, like rare.
So that's the thing is at break of the trend line, right? So let's come where we have more data points. Oh, that's a real holy cow. Yeah,
Yeah,
that
so that's why when
you
after I
can't
got
even
into those puts, I saw that and I was like, oh my God, like what am I doing?
that's
That
glad you
swing put that late call that I didn't see it till after. And I would start wondering, I'm like, why is this going this way? And then I seen I was in a cup and handle, and then I think y'all taught me that cup and handles mean recovery of a stock. And I'm like, what am I doing in puts? Like,
yeah, and that's the thing is I mean everyone was just like, man, Spy's so far. We haven't even looked at Spy. So let's look at this. But that's the thing is like when you're in a cup and handle, right?
yeah,
Or like, oh shoot, it's like bearish. It's a very bearish time. And that's why not Warren Buffett's one of his most famous, I believe he's the one that said it, is the most successful traders are the ones that get in when people are selling. Because people are selling here. That's what that
yeah,
handle is, right?
yeah. But even in that handle, you see the big double, the double bottom right there.
Exactly.
And I saw that too, and I'm like, oh my God, like what am I doing?
So I mean, again, so each handle is different. This is definitely a handle, definitely a cup. You got a massive, even right here, this would have been a great trade. Triple bottom off the weekly 200 EMA. Boom. Um, this probably scared a lot of people out. This wick, you can see that there's a shooting star. So that's another say. I mean that if that's not even double dot right here with the shooting star. Um, but yeah, so basically a break of that handle. So we can come here, we have that trend line, breaks it, and then there's that 9 EMA holds, and then now it's just going up. So let's take a look at good old SPY. So even, oh my gosh, I got so, this is kind of gross. This is what I'm talking about. Brandon has a lot cleaner setup than I do. I just start doodling and then don't delete anything. Um, Another Elliott wave right here. I'll show during live. But look at this. So that's exactly what we're in right now. So SPY could, I mean, if NVIDIA's, we all know NVIDIA has carried SPY the last year. It's still trying to carry SPY. Meta is supposedly going back into China. So China's, and that's the thing you also have to watch is China is hurting. Their housing market is horrendous. It's about to crash if it technically hasn't already. So why do you think the president is coming to California to meet with Newsom? Or maybe vice versa, the president's meeting with Biden because they're hurting. They need the US's help at the moment. Before, if you saw a year ago, 2 years ago, they could have cared less. But you can look right here, another cup. We have this handle. What's going on? Boom. This thing, SPY can explode. But what were people saying the last 2 months? I mean, it's been selling off since July. And that's the thing is, even though this is selling off, you don't think that big banks and everything are coming in. And then what do we have tomorrow? We have CPI this week. What do we have this week? We have CPI coming out. We have the Feds talking. We have so much is going on this week with the Forex factory and all of that. So if we have any good news, we have good CPI tomorrow morning. This is shooting up to 480. Well, let me not get ahead of myself, but we're about to see. And then again, next week, it lines up perfectly with NVIDIA earnings as well. So let's do another experiment and do, let's go back to the fibs, but you can even look at it. So where do you think this little spot is? Again, it's right around that 50%. Maybe even higher. So that's another thing is it's hard because like, do I go to the bottom of this wick? Do I come here? But like I said, I kind of go to where there's a lot of price action. So I'm going to go right around there. So you can see it's kind of not perfect. Let's see if I messed around with it, right? And I come all the way down to this bottom. Right in between the golden ratio. But I will never use a wick when charting. I'll never use a wick while I'm charting the Fibonacci levels. So if I go to where this meet is, right there, that's closer to that 50% that we have. And then you can see, again, look at all these 50%. So even if I came from here to here, and I see that it's going up 50%, it bounces back down, comes up again 50%. So there you go. I like that. I'm definitely using that from here on forever. Yes. I want the meat, not the bones. That's a great way to look at it. So again, this is a 200 EMA. I have a whole saying. I'll talk about this in the 90 EMA, which is that, and the 21. Probably talk about that tomorrow. So this one's a lot easier to do fibs, right? So I mean, clearly there's a clear right here around 340. So we can do it right there. And then we come get the sure. And that, see, this one, it didn't even come back down to the golden ratio or anything. However, what do we have? We had a double bottom. So that shows, and I mean, a handle can definitely be sideways as well. So that's why I always preach it's relative. And you have to be looking at different other indicators, not just the one. So we have, so let's come into the daily. Let's see where we're at on the daily. A 4 hour. So look where we have on this 4 hour, right around that 200 EMA. Yes, it broke through it. However, we did not break that low. And then we rejected it here, came up once we broke it. Now we can take it up. We have trouble at 340 before. So this is just another ugly chart. I don't even know what Meta's doing, but whatever they're doing, it's right. Right? Oh, the days that get Meta in the 40s. Another cup and handle. But like, what happened here? You know? And then boom, to
Earning.
get right. But holy cow, to get Meta, I mean, a year ago, Meta was $80, which is insane. What do you mean reversal levels that we should be looking for? Like to the downside? But again, yeah, to get Meta in the 80s and 90s, it's 300% more just on stocks. And so you can only, I don't even know what their dividends are, but that would have been nice to load up on as well. So for Meta, if we break 340, this is going to continue running up as well. So now let's do another little experiment, right? Let me get off of this chart. Oof, so many. Let's go to 90 day. So most of the times when I draw my fibs, it's on the 90 day and 180 day chart. I think to be able to answer Lewis's question. So yeah, that works. So if we do this 90 day, again, we'll do the 90 day. Oh, look where we are right now with AMD. So this is another reason why kind of waiting is we still have to break this 122, which is a huge level to break. So we go to the high, we can do this 122, and then we can come down again, get the meat, which is right here. So this right here would be like one of those wicks that you're seeing. Now let me remove that. So if you see, look again, 50% retracement, that's where most of that price action is. Right around here, golden ratio. I even have it highlighted. We have this is a 90 day. We have a head and shoulders bounce and off of the, oof, that's a lot of head and shoulders bouncing off of the golden ratio, rejecting the golden ratio. And also you can see here, trying to hold that 200 EMA. Once we break through it, now we're coming and making lower lows, lower highs, and then we're just doing, well, I guess for those of you that know the Elliott wave, doing the Elliott wave to the downside. So why do I do the 90 or 180 days? So if we go back out, this is why we do, oops, I don't know why they're not on here. Because so also let me add the negatives. So I don't add too many. I'll do 1.382. And then we'll add negative 50% retracement. Oops, negative 0.382 is what I wanted. And then the negative golden ratio. So if we do start to sell off, right? You can see right here, these are some levels. Those are some. You all see how I'm able to do that? And that way I won't really necessarily have to add them again. So that's pretty close. That golden ratio, just from the 90-day that you saw I did from the high to the low here, the golden ratio is within $1 of the 3-year low. And then you can see the golden ratio plus 2 almost predicts the exact high. So that's why I like fibs, because most of the trading is done by algorithms. What are algorithms? Algorithms are computers. What do computers use? Algorithms, which are Fibonacci levels, et cetera, et cetera. So that's how I was also able, let's just go right here to try to be able to predict this. We have this cup and handle, right? So this what I just showed you. We have from the high to the low is almost able to predict. And so that's why I'm mad at myself, because I was able to get it off of this golden ratio bounce. So I got in here off of this bounce right here. After earnings, I got in and said, okay, it held this massive tail, got in around 84, 85, and I got out at 100 because why? Because I saw the double top here. I didn't zoom out and say, oh, wow, we can get to 110. Or we can get all the way up here to 161.8 ratio, which is 127. And yes, this would have been extremely hard because there would have been pullbacks and everything throughout. However, that's again where if you know more technical TA, you would have seen that there's going to be a massive move, which keep this move in mind. Brandon and I, we will do Elliott waves together, but keep this AMD move right here where you see this massive, it lines up perfectly for this big move to the upside. And then now what do we have? So not only do we have this Elliott wave here earlier in June, we now have a break of the cup and handle for a potential another leg up. Questions? Are you all confused? Your head hurts?
I was gonna ask the golden ratio is 61-50 and it's not 38 or it is 38 as well.
No, no,
Because I
no.
thought that was the opposite of 61. So I thought you use it as well. Oh no.
The golden ratio is 61.8.
Oh.
So just this number is a golden ratio. And that's what you can find in pretty much all of the universe. You'll if you pay attention, you'll start seeing the 61.8%, or someone calling or people calling the golden ratio that. The 50% retracement is just there because of price action.
Okay. You don't use it the other way around either, like
From low to
with the
high?
numbers, yeah.
No.
Like say if you were like in a downtrend or something.
So
You get
like
what I'm
like
saying?
like here. So let's just take these last few days for these last couple of weeks for or few months. 1 second. So we're in a downtrend right here, right? This is a pretty. Do you agree that this could be a downtrend?
Yeah, that's solid.
Okay, so what are you? So you're asking if I come from if I do this right here, do from the bottom to the top, like that?
Yeah, yeah. I was seeing it if you ever use it that way as well.
No, it confuses me. I mean you can. I'm just kind of a creature of habit, so I just do the top to the bottom. So here, I guess we can try right here. So another way I use it is I just use it for moves. So here's a massive move to the upside. This is that one that I told you about. I got out at 100 right here. This obviously would have been a massive 2 or 3 days. So if we go to from the high to the low, now we can kind of guess, okay, where is it kind of once it starts selling off? Okay, now I'm going to get out around 111, 110. It comes back up. We can see we traded a little bit here around the 105, 50% retracement, et cetera, et cetera. But for this move, let's go from this high to this low over here. So now if I am expecting if this is to trade out like retracement will, this should come back down to around the 112, 113 area and then come back up. But no, I'd never go from bottom to the top. That's just my preference. Some people do. I just don't. I'm not sure why, but again, I mean, this is a pretty clear trend that was going on here.
Hey Jacob, can I say something real quick?
Yeah.
Maybe I'm looking at this the wrong way or something like that. Maybe you could clarify. You know, most of the things are like probabilities and everything like that. Then when I look at the fibs, then if I know if it's getting to the 23 percentage level on the downside, then I know is probably is really low. It's probably going to be a possible reversal. And the same thing on the upside, if I see it at 76, then I know it's a possible reversal going down, the 23 part of reversing going up. Is that wrong to look at it that way, or?
Not necessarily a reversal, but rejection, yes. So you're more inclined, stocks are more inclined to reject those stronger levels just based purely off of the algorithmic quantities that they have. But for it to potentially, so when I hear the word reversal, excuse me. So let's do the true 180-day low and 180-day high. Okay. So let's come all the way down to here. Right. So you can see here, it doesn't quite. So we're going up, it hits that 38.2%, right? You can see it kind of rejected it, but it still continued this uptrend. It never quite reversed back down to that 23.6. And then here you can see, but yes, yeah, so when you get closer to the 100% level, the high of the high, that's going to be hard to break. That this resistance is going to be the strongest, more so than this 23.6 or the 78.6. But you can see here, we did reject that 78 point, and that's where we are currently. Now, I'm going to be looking at this 115 area, and if we break again this 9 EMA, which I always have on, if we break that to the downside, then yeah, we might have a little bit of a reversal back to 110, just so we can regroup and continue moving, because this is a very, very big move so far. So the term, I guess I have a little bit of problem with reversal, but rejection, sure.
Got it. I understood. Then just use other things for confirmation, like the EMA, the 9 EMA. Just don't rely just heavily on the fibs.
Yeah, exactly.
Okay, thank you.
Do we have any other questions? Again, if you have kind of jump off of here, So I understand I kind of covered a lot. The fibs are kind of confusing if you try like look at them at a macro perspective as I do. If you just want to look at them as strictly numerical values, you can do that as well. But the reason why I kind of give the backstory behind them, it just gives them a little bit more relevancy, in my opinion, knowing that it's out there in the universe wherever you look. So if you want to look up the fibs and do some homework and see exactly how the 61.8%, how is it 78.6, is 38.2%, how those come about using the Fibonacci numbers, the Fibonacci sequence, then you all can do that. But again, here, I mean, there's the Fibonacci extensions, which again, I don't know what these do. You have the Fibonacci time series, Fibonacci time ratios, so out of all of these, there's about a third that are dedicated to Fibonacci and his
Yeah,
numbers.
I was gonna ask about the Fibonacci extension, but I don't know how to use that. But
The
maybe
time this one,
that's a whole nother class. Yeah.
this one,
Yeah,
I don't
because
even know what it
that's
is.
more so like where price is going or something. I wanted to learn how to use that, but that's a whole nother thing.
Oh
Oh
dang.
no, not here. Maybe
Yeah. I've never even clicked on it, so I don't even know what that is.
no, it looks better on what's the other
Thinkorswim.
one?
Uh
Yeah.
not think
No,
something
Trading View.
trading view, yeah. All right, I'll dabble with that a little bit. I'm always down to learn. Awesome. Well, appreciate you all for jumping on here. Again, this I hope it's not too complicated. But I will again answer y'all's questions. There's all sorts of YouTube videos on this that explain it in a lot more depth than I can do in an hour. But again, using here we have another double bottom. So using very easy chart patterns for more complicated technical analysis to get to your destination. You all have a great evening, and and again, we'll have another class tomorrow, which I will talk about the 9 EMA and the 21 EMA.